can you tell me what the difference is between underwriting the two different assets, between underwriting a commercial property and underwriting residential?
Okay. Yeah, yeah. From the information that I have, I mean, I'm not an underwriter currently, so but I do underwrite my own loans before I send it to the bank. Um, on residential, what they use, residential people, uh, they use debt to income ratio, which means if you owe, they look at your credit and your complete total debt on including the property you're buying, all your cars, your payments, credit card, everything. It cannot be more than a certain amount of time. I mean, certain amount of percentage of your total income. For example, if you're making 100,000 a year, you cannot have more than 50,000. I'm just giving an example. I think it's some companies lenders they use 53%. Some they use 50%. But let's say just for the sake of discussion, it's 50%, which means if you make 100,000 a year gross, your debt cannot be more than 50,000 a year. And if it is, which means you have to put a little more down payment, or you have to pay down the credit cards or car payments in order to get there. That's the proper uh, part of the residential. But in commercial, they look at the uh, DSCR or debt service coverage ratio, and that is it does not go like DTI or debt to income ratio. They go with the value of the property and what the income of the property is, the NOI or net operating income. They look at that and they go with the ratio of that and they underwrite it according to the net operating income, and that becomes the underwriting method for commercial.
For commercial. Okay, so if I understand it correctly and giving the information to someone else, when you underwrite a multifamily property or a single family home, it's going based off of your personal income expenses. But when you underwrite a commercial property, it goes off of how much the asset is bringing in income.
Absolutely. The income producing property, they only look at the income. Of course, don't forget, you remember we talked about the global cash flow, they look at it as well on this side, but the heavy weight is on the subject property, and they look at that one, not yours debt to income ratio.